Stock picking can be hard. Beating the S&P 500 can be hard. This is a stock chart of JP Morgan against the S&P, and as you can see, they moved almost in lockstep over the last 14 years. However, we believe there is a good time to buy JP Morgan and a bad time to buy JP Morgan. When you're trying to outperform, we're going to go through why we think this is one of those times. So we think valuation matters, long-term, short-term, especially when you're buying bank stocks and trying to outperform. Take a look at the price to book value for JP Morgan for the last 25 years. Right here in the internet boom, it got above 2x, and then it sat here in the 1.2x on average, dipped below 1x down in this level, and then up here in recent history, it has popped back up to 2.5. Let us show you what that does to your returns relative to the S&P. If you've been watching our videos and want to invest alongside us,
click the link in the comments, select your brokerage,
search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
So we plugged it all into ChatGPT, and here's what we see. Look at these high price to book valuations, and look at the excess returns to the S&P 500 in these high price to books. That's over 1.5. Bad return relative, bad return relative, bad return relative. Only in 2021 did JP Morgan outperform. Remember, we were printing a gob ton of money back then. And then take a look at these low price to book values, right? So the excess performance outside of 2008, which was a recovery year, plus 47 on the S&P, plus 26 and plus 17. Clearly, if you buy JP Morgan or bank stocks in general at low price to book values, they have a much better chance of outperforming the S&P, and vice versa is true if you overpay on price to book. Right now, the price to book is almost as high as it was in 1999, which was the worst time relative to the S&P to buy JP Morgan in the last 26 years. So when we're trying to outperform the S&P 500, we look deep into price to book values, and in general, the mega cap banks are all trading at 2x or higher, which is usually a relatively bad time to buy banks. It is why we are staying away from these stocks right here and looking for a better valuation metric to enter so that we can outperform the S&P. Thanks for watching. We really appreciate it. All the likes, subscribes you guys do. We really love that stuff. And if there's anything you guys want to see, hit us in the comments.